Yo, what's good? What's good, fam? It's your boy, Royalty Trades, coming in with a Sunday watch list. See what we gonna look at this following week. I hope everybody had a good weekend. Got your mind ready for this upcoming week. Went over and back tested and checked and see what happened last week. If you made any mistakes, seen what went well. If you did anything that made you some money. Um, Last week was pretty volatile, as you can see. I already got the spot chart pulled up. So I'm gonna start off with breaking down the spy going into this upcoming week. So as you know, the first thing I like to look at is gonna be it's gonna be the bigger time frames. So as of right now, the month's just getting started. Here it is, August 11th. And as you can see, this month right here, this is an opening price of 552, and here we are right now at 532.99, so $533, and we still have 18 more days left in the month. So what you're looking at right now, you're seeing all the gains from the prior weeks and months being lost over a couple of days time span, which I mean is drastic. What we can look for is a consolidation, just seeing how quickly all those gains have been lost. But once you start breaking it down from months and you take it into the weeks, um, the, the dip was bought up pretty quick at the 510 range, 510.50 on up back to 533. That dip was bought up pretty quick. So that is a good thing on behalf of investors. Um, it 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 looks like this is the range right now where we possibly could be consolidating going into earnings. Well, not earnings, elections. Um, the Fed did have a lot to do with this, looking to see whether they're gonna cut rates or what's gonna happen. We did have a lot of earnings. Apple, Microsoft, Meta, Amazon, all those big 500 companies, they pretty much they had a lot to contribute to those price ranges being touched and being bought up recently. So what we're gonna look for going into this next week, um, specifically this next week, watch these gaps right here. This gap right here between the 537 and that 539 range, I'm watching to see if that range is going to be tested this upcoming week. So let's get rid of this right here and let's break down the daily. All right, so last week we took a look at this and we said that we wanted to um, retest these levels. But then, of course, Monday opened up and it was a complete bloodshed. Um, Going into the rest of the week, up until Friday, we've seen a pretty much a pressured price movement up, trying to fill this range that was left open between Friday's close and Monday's opening. Now, I did think that we were going to possibly come down here toward this lower 500 range first and feel that and make an attempt up. But I guess since the sell-off was so dramatic, a lot of people jumped in right away and they bought going into lunchtime and pushed the price all the way up, which we did see a sell-off. The highs that it pushed that Monday was around 523. And then we did see the price action retrace back down and end up closing around 517. Uh, Continue on to that week. There was a lot of bullish momentum attempting to carry that on up and push the price even further up. We had a lot of issues right here around 528.54. It gets there, price action drops, it goes back up, come back down, goes back up. And then Friday, we seen a lot of consolidation here between 528 and 532. Before close, it actually pushed up and tried to make an attempt to push up back towards 535 range. So right now, 505 is still on the table. 540 is still on the table. One of these levels are gonna have to be pushed, but pretty much what they're gonna do is gonna either be a sharp move up and then a comeback and a retest down back to this 530 range, or we could see eventually this roll back over and come back down and come and find this 500 level. As you can see back over here with this demand between 503 and 498, we had a nice fill and consolidation here. Once we got that consolidated range and we seen that it held, that's when you get the gap up and you get the continuation up and you see a lot of this supply and demand flip. So you see that this was resistance at one point in time. You come over here and you see that resistance become support. And anytime the price drops back below within this range, you see it immediately gets bought back up. And that's what we want to see coming over here. So the only thing that I might possibly be worried about is we pushed up, but we have to see, is this going to be new support? Or is it just a false breakout and we come back down to fill this range here? I was looking at Bitcoin a little bit earlier, and Bitcoin was flushing or attempting to. Yeah, so it's still coming down a little bit, but it had a massive move up on that daily candle right there. So this could be support for this. And if you don't know, Bitcoin does kind of give an early warning to the tech sector of the market. So normally, like last Sunday's watch list, we was watching Bitcoin as a tank. And Monday when it opened up, Bitcoin had opened, it made such dramatic price action that it led to the market actually giving us that early sell-off warning that Sunday night. So going back to the SPY. So right here, I marked this consolidation level here. Let's take that off. I'm gonna close these gaps. And we're gonna draw some trend lines. So right now, what we're gonna look for is to see if we have any rising trends that's gonna hold well to this last dip that we had previously. So I always like to draw mines at rising trend lines. I don't really like drawing just straight horizontal consolidating because it's easy to get chopped up in the consolidation up and down, up and down. At least if I'm drawing it like this, I know if we touch here and I go long, I know next time that we come down and touch, at least we'll be making just maybe a couple pennies or $1 higher than my previous entry. So that's why I like to draw my trend lines at a rising angle instead of drawing just straight horizontal trends. So this one right here looks decent. Here we got a bounce here. You got a second touch here, and then almost a third touch here. So now that we have that lined up right here, next thing that I look for is any type of downward resistance. And looks like we'll have that right there. So as of right now, this is what we have marked up on a daily. We kind of have a support level of 513 within this consolidation range. And then we can kind of have this as our resistance here. So we can look at resistance anywhere from 538 up to 549. And if we go back and add our gaps to see what's going on right there, as you can see, one of those gaps does fall within this consolidation zone here, up to 540, 539, leading up to 540, 541. So that's what we want to have a lookout for this week on SPY. We want to see how it's going to play out. Right here is no man's land. We have a little consolidation over here. So we could continue to see price action move here and pop up and come back down, or we could see price action come right here and stall out and then eventually come back and start hunting more support to see if it can get more buyers to step in here. So we're going to label, let's do support around let's do 513. And then we'll have resistance. We'll do it here just because I see this little area right here. We'll do it right there. So we'll have support at 513, and then we'll have resistance around 542.50, 543 for the SPY. Now, if we break below these levels, we have to go and map out a couple more ranges. If I just had to go and map one out right now, we could possibly see something like this, because we do want to take into account that it's an unfilled gap still below. Yeah. So if we does decide to come down and fill this gap, what you'll see is you will see a break below this 512, 511 range. You'll see this gap get filled here. You might see a little consolidation, and then eventually you will see it come down and retest here before making another move up. So that's what we want to watch for. If that trend below 513 does fail and we start to break that structure, this is what we'll have to look forward to. You'll see that gap down there get filled, and then it'll go and hunt for that next level of support, and then it'll come back up and try to see if it has enough buyers step in to go ahead and make another move up and break out of that penny. But let's not go too far. Let's focus on what's at hand right now going into tomorrow. I always just kind of like to have a game plan going into structure breaks. Along with this one, like I said, we still have this supply zone right here. Supply always brings the price back down if it doesn't have enough volume to push and break out above to go and want to retest 560. Even sometimes you might want to go and see if there's any smaller zones that may be hidden on smaller time frames. So we take out some of these so we can see the gaps a little better. Yeah, we still have that. I think the 5 minute had a hitting supply, a hitting demand zone, which we did see a gap up Thursday. And what happened was it got partially filled, and you still have this unfilled level right here down to 518. I think it's going to fill eventually, and that gap down to 518, if it comes down 519, if it comes down, you're going to see it want to drive prices down towards this support level down here. So let's just see how that plays out, and we'll be able to go from there. So the next thing that I want to look at is Apple. So let's go and get that pulled up. All right. So let's go look at the weekly. All right. So Apple had a big buy after earnings. It dropped as low as 195 and it closed back up to 216. Beautiful buy up. I almost kind of mimicked this candle right here from this week, which was June 10th, the week of June 10th. So if we go to the daily, as you can see, we got a supply zone trying to be filled right off top. We're going to need for this to push up above this 217 and then continue up in order for this to become a new support zone. Right off top, I mean, what I see that kind of draws my attention is that this and then this. Not saying it's a head and shoulders, but normally when I just see a peak in the shoulder and something over here, I always kind of get a little suspicious just to kind of see how that pattern can play out. Because it could eventually continue to push up. Like I said, use this as support and make an attempt to push back up toward this 240 range. Or it could push up, and that's resistance again, and it makes another dramatic fall back down here. Because as you can see, this is one big move. Push up here, next day push up here, a little consolidation. It finds supports in between this Tuesday and Wednesday. It finds supports between those 2 days, and then it makes a dramatic move right back up. So over here, not so much. We see a little bit more choppiness and finally a push into supply. And what we see next, like that's why I'm just real sketchy about swinging calls or puts over the weekend. Right now, swinging calls over the weekend, just because we're in a pressured market, very, very pressured market. And I didn't even see this, but there's an unfilled level down here, 173. Not saying that we're going to fill it right now, but eventually, as you can see, majority of them levels always get filled. So if we zoom out and try to find some levels here, the first thing that I'm gonna look at, I'm gonna try to find the oldest trend that I can find, which this would be one right here. And then I'll start scaling my way back in closer just to see what we can see as far as more of a short to mid-term time frame going into next week. So I'll try this one and see if this one kind of lines up. It does, but it also shows that dramatic sell-off probably from that Monday. Yeah, it breached that structure and it bought back up. It did recover and it started back trading to the supply zone from the gap down. Apple's kind of iffy right now, honestly. It can go either way. It can be a make or break opportunity. We do have downward resistance right there. So um, that's just the bigger picture as of right now for me. This level right here is definitely going to be interesting that I have mapped out here. just to see how that price action is gonna react as it goes into this resistance area. So right now, we can say we have support around, let's do 209.50. Let's say we have support here around 209.50, and then we have resistance up here at about 221.69. And that's just above that supply gap that's right there. See, as it trades up, it still has a little bit that's unfilled right here at 218, 219. And it can continue to push up until the exhaust. And then we'll see a dramatic move back down here to try to find some support. If it does break out, we could see a squeeze up to the next zone between 231 and 234. So that's what we want to watch for on Apple. You want to see how the price action is going to react above 218 if it gets above there. And it starts to try to break above this 220, 221 trend line. And like I said, if we do, we could see a sideways movement. And let's just stretch this out. We can see a sideways movement here. And this could trade sideways all throughout this breakout level. And it could trade sideways as it wait on the rest of the market to do what it's gonna do. And then once the market starts to recover, you'll see Apple recover along with it to push up towards here. If not, then we'll see a breakdown if the market continues to sell off and goes into weakness, and see this 184, 183 level down here filled too. And that's right above the second trend line that we have here, down here, 176, 177. So we just want to have our heads cut in for a rejection up here or a consolidation in this range to push up higher, or a consolidation here to break down. And if it breaks down, this move that you see over here, where you have this big, just straight shoot up, you can see the same thing happen here, over here, where it just breaks the market structure here, and it has a straight move down. If the market continues to make moves into weakness this upcoming week. So that's what we have on Apple. Of course, you have this down here. I don't know when this thing's gonna feel. The market's just tricky right now. The Fed needs to come up with a plan to see how it's gonna build some trust in investors, so that we can stop picking and choosing a direction every other day, because that's pretty much what's happening. The market seesawing a lot of people in contracts, and it's burning up their premiums. They're going calls. And what you do is, one day you see the market sell off, consolidate, sell off again, and then you think that it's over because it comes back up, it makes a run up, and you grabbing calls for the breakout, and then the market opens again, boom, it's killing your premiums. If you grabbing at the bottom here and you thinking that the market's gonna feel down more to the downside, it makes a run back up to kill those people that's playing to the downside or playing puts, burns those premiums, comes up here. And if you're playing calls to the upside, once again, the market could open tomorrow and we'll see it flush out and make further moves lower. I'm not a bull nor a bear. I'm just playing with the charts give me, and I always play both sides of the scenario, so that way it's easier for me to adjust when I need to, and give my signals early enough so the people in my Patreon, they could be able to adjust their plays accordingly too, along with me. So that's Apple. I think I want to look at Meta, because Meta had earnings. It had a big flush down, but it also had another nice move back up. So I'm gonna look at Meta and see what that's doing. Meta has been strong for a long time. You had this dramatic sell-off here in 2022, and since then it's just been on the rise up. Zuck the truck, as they call him. He's been making big moves on Meta, and right now we're just in a consolidated phase as far as the price action goes. Between April and now, the price action it hasn't moved too much. It's just stuck in that zone, and it's barely red for the month. And this is a big consolidated zone here, right there between 443 and 535. Big consolidated zone there. So let's go ahead and break it down into the daily. We do have, are these gaps? Yeah. So I definitely don't think these are going to be filling no time soon. Like those might get saved for like a stock split or something. But we did see a partial drop and it tried to fill, but it still has room down to 400. Yeah, as you can see, it's just a big seesaw. Nice channel here, dramatic drop here, another channel up, another dramatic drop. So history always repeats itself. If you're gonna go with probabilities, we could see another push up into this range and then another dramatic sell-off back down. It always happens quickly. So let's go and see if we can find any trends that could help us see it a lot better. So first, I got to get rid of this so I can see a little bit better. I think I'm gonna take this trend right here and map it off of this. Because right now that looks like the most short to mid-term trend. And it's been holding up fairly decently. Nothing too dramatic. And as far as the downtrend, we could watch and look for that right there. So here we are. Now I can go back and add that zone, big consolidated zone. I'm gonna add it here. Other than that, we've been getting short little wicks below that and above that. And this will keep us within the trend here, and it'll keep us within the trend here. So right now, as far as Meta goes, looks like we got support here 453, and then we have resistance here around 509. So I'll put that here and that there. So that's just what we want to see. If it attempts to break out, we could see that be the next level between 528.60 and 541.75. That'll be our next level if we push up to see a consolidated area here, and price action could bounce back and forth between here and here. And it could even go back down here and keep retesting this descending trend line there. It all depends on the market and how the market wants to move this upcoming week. Like I said, it's a lot of good names. It's a lot of strong price movement on certain stocks, but it just all depends on the certainty of the market, what the Fed wants to do, um, and how the volatility is gonna play out into the up and coming weeks. But Meta is it's kind of high right now. I would want to really play the breakout here just because, well, let me rephrase it. I wouldn't want to play the swing here and hold because there's so much more room to the downside that could happen if it does decide to come back down. I would take the day trade on a breakout above 520, and I'll play that 528, 529 range, and I'll take profit there just because here we go with resistance over here. So you can expect the resistance to play out over there and then look for support back down to 509. But I just wouldn't hold too long just because that's such a big drop. It's almost a $50 drop back down to 455. Um, and it's just that'll be too much for my personal anxiety to grab swings way up here, knowing that we have a pattern of upward channels 2 weeks worth, and then it's possible that we can have another one going here, and then a dramatic sell-off back down here toward the 455 range. So let's just watch that. It constantly gets bought up whenever it gets within this level because this is a gap up. So that means buyers do like these levels and it constantly gets bought up. We are seeing higher lows here, here, and here. So we just have to see how that plays out. If it goes to 455, 456, and it looks like that the market could be rotating back up once it hits these levels, then yeah, this would be a nice time to buy calls here back up to 509, at least 3 weeks out if you're going to go with the expiration dates, just so you can survive through consolidation periods like here. Let's see if I can, just so we can survive consolidations like this. You don't want the theta to completely eat up your contract. So, I mean, if you take them, you get down here, you can at least take a 500 or a 495 call about 2 or 3 weeks out, and you should be able to make some decent money on there. Like I said, these price actions down in this range seem to get bought up fairly quick, 2 weeks out, and about $20 or $30 out the money. You should be okay once it gets in the money, going into probably a week or two after holding. You should be sitting fairly nicely. So that's that. And I will look at let's look at Nvidia. Uh, all right. So Nvidia does have earnings coming up, 828. We have been just seeing a straight downwards trending channel on Nvidia. It kind of looks like it wants to consolidate within these ranges here. And I believe the price action is probably going to dry up for a little bit. I could be wrong, but like I said, when earnings are coming up, you're going to see a dramatic push up as buyers buy in, or you just could see a big consolidated movement sideways leading up to earnings and then a push down the day before or 2 days before earnings if they're expecting for the movement to go back up. So if we check the gaps, that one's been filled. That one still hasn't been filled. This one kind of makes me worried. Like, is that what earnings is waiting for? To drop the price down here and fill that up so that way investors can go back long going into 2025? or does the market just have more room to continue dropping prices uh, as we head deeper into the summer? So let's take these gaps off. Let's go look at the monthly chart. Big red candlestick on the monthly. Nice little downward trending channel here on the weekly. And it's using this range right here as support, looks like. Keep in mind, people, like I'm charting with no indicators. It's just straight market structure and looking at the price action and the consolidated levels. You don't have to slap on 30 indicators. They're nice to have on to accessorize what you already see just with straight charts. But other than that, I always try to chart your stuff up just looking at your candlesticks or bar charts like I do and go from there and then go and add your indicators on second. So that way, you know you've charting pretty well if your indicators are giving you that justifying what you're drawing up. So we go to the daily and try to find a nice trend going into this following week. Right off the top, I'm probably gonna ride with this one. We did have a brief break below, just like every other stock going into Monday. But the price action did push itself right back up and consolidated around the 105, 104 levels. So that's probably all I'm gonna do. I may draw this one out just because I know it does kind of have a gap down that hasn't been filled yet. And like I said, this gap right here below down to like 75 or in that 70 range, that could all just be waiting on earnings price action to drop down there. Investors buy it back up and push the price back up, kind of like they did with Microsoft with that 393 range. So as we know, the king of chips, the price action does move dramatically. It will do what it needs to do in order to burn out your contracts, calls, or puts before making the move up. And every once in a while, we do get a solid move in either direction. But as you can see, if you don't have enough time, you'll get stopped out there, 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 and then this right here is just a cluster of both directions being moved. But you normally need a couple of days time on contracts for NVIDIA in order to make a decent amount of money if you're trying to swing them. Of course, you can day trade them just because of the volatility that moves on them, but you have to be in and get out during that same day, or you need to have some time on that expired dates in order to catch the move that it wants to make. So at this particular moment, we have this gap up right here, which is where a lot of investors have been buying and trying to maintain the price hit right there. So as you see, this 96 range right here, it's been bought up one, two, three, four times. Four times. So it could be attempting to use this range right here as support on the move back up. I think we had some supply levels up here to 121 that have not been filled. So if I was to look at it, I'm going to say The consolidation zones are super, they're they're crazy, crazy big. So I'll go with like this. I try to keep it simple. Even though that range it really could go all the way down here, but I just want to catch the top of it. They kind of coincides with the top of this trend line here. We could have another trend line if I wanted to break it down even more. Probably here. And that'll just be, instead of it being all the way up here, just the very top of this consolidated zone would be the resistance area at like 117, 116.50. But right now, going into earnings, I would expect for this thing to have big moves up and down between like 111 and probably $97. Yeah, I would expect the movement to be big consolidated movements up and down until earnings come up. You'll probably see the theta and the IV start increasing as the earnings date comes around. And the best way to probably play that is to probably sell options instead of just holding contracts. If the IV spikes like that and you don't have them far enough out the money, it's different ways. I'm not big on like credit spreads and selling options contracts, but there's ways to play high IV to where it can be profitable for you. But right now, we're just gonna watch the consolidated levels between um, I would say here at 111.50, and then right here at $96.50. I watch for those ranges to be looked at and played out and see what the price action gives us. I don't like making assumptions too early, too early in the market because anything goes. But I do want to have a game plan ready, like I always say, in either direction. I'm just gonna look at Rivian too. This is something that I drew out on Rivian probably about a week ago. You see, I thought that it was gonna try to make an attempt down here, but it's been staying within these consolidated levels. It hasn't quite filled this gap here. I don't know what it's waiting on. Earnings came out and it looked like it was kind of mixed. So that could be the reason why the price action is stagnant like it is. Um, yeah, we see big moves up, consolidated short moves down, and you have this big open way down here at the close up here, it opens way down here and bounces right back up. So this is an area that investors are liking. This is definitely area between 1340 and 1212. This is an area that they're liking, that they're buying up. I don't know if they'll wait news or whatnot, but it's been getting purchased up pretty quickly. So we can keep watching the price action here between 1475 and 1391. We can keep seeing how these levels hold up. If it does have a rug pull, I don't see any just solid support between these two. I mean, we may have a little something. We may have a little something right here to where it can hold here and maintain this price action above 1350 as we work his way back up. But even then, this this is what kind of bothers me. This little consolidated area right there. So this was once a breakout level. Here we are on this side of it, and it's consolidating. will we get that move down if this and this are both consolidated zones? Will it get that move down to finally breaking below this? Because this trend right here is still early, so it's not solid. This trend down here, uh, this goes all the way back from April of this year. So I mean, this is a kind of an established trend with the bounce here. As you can see, it had a nice consolidated area here before the breakout. I think that was after mixed earnings too, but it had that Volvo news that pushed the stock price up and a lot of people got excited over. So this is just going to be something that you have to watch day to day, just kind of see how the price action goes. Anytime I see gaps like this, it just kind of puts me on edge as an investor because you don't really know when it's going to feel to the downside or if it's going to continue to push to the upside. As you can see, it can have big moves to the upside. If I get rid of some of these lines, it can have big moves to the upside and come back within these ranges here between the lower 16 and the higher 16 levels. So anything's possible, especially with news or partnerships or anything like that. We just have to watch it day by day. So just be on the lookout for any structure break below $13 to see if this potentially fills down to the lower to the mid $11 range. And if it comes down here, I would expect this to serve as support and aid in it pushing back up to go back and retest them levels. I think that'll be a healthy dip to buy in right here at 1150. So, but that's all I'm pretty much gonna look at today. I don't really have too much onto my radar. I just want to see how the market opens up tomorrow, and then I can go and see what we're gonna do. SPY still needs to push up. The Qs need to push up, and semiconductors are probably gonna consolidate, waiting on Nvidia earnings on the 28th. So we'll all see how that plays out. I will be making a few more videos to give to the new investors. I'll be at least once a week. I'll be covering a different strategy, whether it's MACD, whether it's RSIs, Fibonacci, different ways that you can, different indicators you can use along with learning price action and market structure. So that way you will have something else that'll work in confluence with what you have, and it'll be able to help you make better decisions about which direction you want to play the market and not just take. I see too many people playing blind options and calls and puts and not really knowing why they're taking them. And that contributes to people losing money. So once a week, I'm gonna try to put something out like that because I think education is important, especially in investing. It's just like anything else. You learn how to read alphabets so you can put together words to read the books. Charts are no different. You have to learn the fundamentals, the structure, the patterns, so that way you can read a chart and know exactly what it is that you're looking at and that what you're reading. So that way you can be able to do your own due diligence and be able to make an adjustment based off what you see and not exactly what everybody else sees. So y'all stay tuned, stay tapped in. We're gonna make some money this week. We're gonna play what the chart gives us and not what we want. And we'll take it out from there. So man, y'all have a good week. And I'll see y'all in the morning.